So let's look at what economics involves. And essentially economics is about increasing people's net well-being, increasing their levels of happiness, increasing their welfare. That's very much what economics is about. So it's about people, what motivates people, what incentivizes people, why they act in certain ways, and how they can pursue, and governments can pursue, higher net well-being. But the two key branches of economics, macro and micro. Let's look at microeconomics to start with. Microeconomics is very much concerned with individual markets, individual prices. Like, why do you pay a certain price for a hot chocolate when the chocolate in that might be worth 10 pence? When economists could explain that very easily, it's all to do with labour costs and the rent that the cafe has to pay. Right, looking at this, price is very much determined by demand and supply. So demand and supply is a key part of economics, and what moves demand, what changes supply, and how you end up with a certain price is a key area. Cost is important. So what are the fixed costs of running a business, for example? If you supply water to a house, the fixed costs, which are the pipes from the reservoir to the house, are enormous. So that's something particular about that industry. So you're looking at costs, how much competition is there? Generally it's good if firms compete with each other because the customer will get a better product at a lower price, but not always. And so the area of firms and how much competition there is a key area of microeconomics. Another key area is what we might call market failure. Why do we have problems in society such as pollution, congestion, climate change? And it's because often these prices are not the right price. They don't fully take into account the damage that we do to the environment, for example, such as air pollution. When you decide to drive a diesel car down the road, that is not included in the price of the diesel, for instance. Another, of course, important area is the labour market. Why are some people paid 10 million, 5 million a year, well, yet other people are paid £15,000 a year for doing the same amount of hours work? Extraordinary. I think, again, that's very much to do with demand and supply, but economists spend a lot of time looking at labour markets, including people's incentive to work. So this is broadly microeconomics, which works incredibly well in terms of making predictions. I'll give you a little example. Why do supermarkets hardly ever, unless there's panic buying, run out of, say, 30,000 items that the average very large supermarket stocks? Because supermarkets have the forces of demand and supply well sorted. Okay. Now let's come to macroeconomics. Macroeconomics is looking at the whole economy rather than individual markets. So you might look at a whole country like the United Kingdom and the United States. You might look at the world economy. And in macroeconomics, key area is what we might call government objectives. A lot of governments want to boost economic growth in a sustainable way. They want to reduce unemployment, and they want a low inflation. They don't want prices rising too quickly. So economists will look at these areas that people tend to associate with economics, and that governments and central banks, such as Bank of England, the Federal Reserve, pursue certain policies to achieve these objectives, such as changing tax rates, altering government expenditure on things like health and education, and changing interest rates. And these all affect different outcomes, economic outcomes in the future. Of course, there's an international dimension, which is to do with trade and exchange rates and globalization. And what happens in terms of levels of trade and changing the exchange rate can have an impact on a country and unemployment. And you'll understand that by studying macroeconomics. And of increasing importance in economics is looking at these areas such as environmental economics. Behavioural economics is what motivates individuals and how do they make mistakes where they don't always behave rationally. For instance, why do people consume certain goods that aren't good for them? So behavioural economics can result in policies to explain this and also solve these problems. Happiness economics is also something that's studied how you boost net well-being, and of course connected to this is the problem of inequality, the gap between the top and the bottom in society in terms of wealth or in terms of income. So economists, how do they do this? Well, economics involves a lot of writing, so you need to be able to write an essay generally, leading to a conclusion based upon analysis, which comes from economic theory. But also you need to be able to look at data and observe trends in data. Economists are very keen on data. Is it an upward trend, a downward trend? What is happening to the data is a key area that economists examine. And of course, particularly economists, a bit like weather forecasters, have a model of the meteorological systems to predict what will happen weather. Whereas economists have a model of the economy, either the whole economy like the UK or the USA, or of an individual part of the economy, and they make predictions based on these mathematical equations. At A level, you don't need a lot of maths. At university, you need lots of maths, you need A-level maths, because you'll be working on these equations. So economists, can they make good predictions? Well, I'd argue certainly in the short term in macro, the predictions are a lot better than the long term. And in micro, the predictions often turn out to be correct. Hence, when you go to the supermarket, you can get that Mars bar or that milkshake. Anyhow, thank you for watching. It's a great subject to do, and I think the great thing about economics is it explains the world around us. Thank you for watching.